most private traders doomed to lose?
Yes, I'm afraid so. As I said, I've heard, I've never checked this out myself, but which is quite scary, the average the average spread betting or contract for difference account client lasts 3 months. It takes 3 months for him to wipe out his funds. I don't know what the average deposit size is, but yes, most times I'd think your average person is always going to lose, particularly if he's dabbling in foreign exchange where the margin granted to the client, i.e. the leverage is so huge that the chances of being wiped out are very, very high for anybody.
Well, what do you think are the most common errors that young, new, inexperienced traders?
Overconfidence, improper use of leverage, i.e. betting too big on limited resources, inexperience, in some cases stupidity, but not all these people are stupid. Impression, trusting people. I mean, I find it's as an investment guide, and this sounds very cynical, but so be it, that is never to believe anything that anybody tells you. Assume that any director of any company talking to you or broker is lying to you. And unless they prove otherwise, assume that everything they say is false. And that it does sound a bit negative, that, but it stands in good stead because more often than not, particularly on smaller companies, you're up against these guys are promoters. That's what they do for a living. They're snake oil salesmen. They're charming. They'll say anything you want to hear, and that's a lot of the reason private clients lose money is because they believe what they're told by people who should know better, and they don't realise that they're being ripped off. People naturally are optimistic. They want to believe the dream, and a lot of share promoters are some of the most charming and persuasive people around. That's why I don't like meeting them. Well, that sounds maybe a bit cynical, but just assume that when somebody's trying to sell you something, they're not doing it out of charity. When your broker wings up and says, you ought to have some of these, or when you go to a exhibition, say, if you're a private investor and you go to one of those money conferences, and every little company's got their stand with a smooth-talking chief executive in a suit, offering you a glass of champagne and explaining to you in great detail how wonderful his company is. Just assume that they're bullshitting you, because they are 9 times out of 10, unless they prove you pleasantly surprised, which, like I was saying, reading, when they say, oh, I'll make a note of that company. God, they actually did what they said they were going to do. But most of it, particularly on the smaller companies, most of these people they just want your money so that they can live comfortable lifestyles. As shareholders, you proudly think you're owning the company. You're not. You're just paying, more often than not, you're just paying for these guys to pay themselves 100, 200,000 quid a year for doing nothing. And then when they run out of your money, they come back to you and ask you for more. So they have to be persuasive, these guys.
Yeah. Why do people buy shares whose numbers show them to be expensive or poor quality? Do you think?
Very good question. Because they're stupid. I don't know. Because their brokers have told them to. Because people buy shares for a number of all sorts of reasons, and because of the wealth of information we get on the internet now, everybody can be an expert, and a lot of people think they are experts. And a lot of people, for instance, make very fundamental mistakes. Like they might think, cool, that's a very nice product, I'll go and buy the company that makes it. And without sort of thinking, is the share price pricing in that it's a very nice product? Or, cool, I don't like that, I'll short the company because I don't like their product. I mean, people are very unsophisticated. And give them, a trading tool and an ability to check share prices 24/7. They start to believe that they know what they're doing, and a lot of it's momentum. And a lot of people make money. They might buy a couple of stocks just because they're going up and do well out of it. So it's something that they continue to do until it goes wrong, which it normally always does.
What do you think you need to give up in order to become a successful trader?
What do you need to give up? You need to give up being emotional. Give up allowing things to get personal, which is very easy particularly if a position is going against you. It's very easy to get sort of angry and emotional, and that never helps. You've always got to take nothing personally. Give up being, falling in love with a stock, or the opposite, falling in hate with a stock, as it were. Always have an open mind, and always be prepared to change your opinion if you're wrong. I mean, for instance, if you want to short a stock or go long of a stock, for instance, if say you want to short a stock, you don't want to go and read why other people think it's a bad idea. You think it's a bad idea. You want to read why people think it's a good idea. What is the case for buying this? You want to read the analyst buy notes. You don't want to sort of, which is the human thing, is just to stick with all the sell notes and say, oh yeah, I agree with that, and then feel sort of bolstered by it. You want to go out there and find out what the opposition are saying, and the particularly quality opposition. If there's an analyst you respect, for instance. I'm not talking about a company taking a stake like I've just mentioned, but if you think that you know about a company, then find out who the expert on it is, and if they have a differing view, then take note. Don't take comfort from other people sharing your view.